Good morning from London. I'm Anna Edwards alongside Guy Johnson and Kriti Gupta. We're an hour away from the European opening trade. Here's what you need to know. Turning point. Volkswagen considers its first ever factory closures in Germany in an effort to cut costs as Europe's car industry struggles. The waiting game continues. French President Emmanuel Macron comes under increasing pressure to name a prime minister as a key budget deadline approaches. And Benjamin Netanyahu says Israel won't cede control of the border area between Gaza and Egypt as he remains defiant in the wake of nationwide strikes and protests.
In the meantime, a quick check on these markets. When we look at the futures trade, marginal moves in either direction, flat on the Eurostock 50, slight outperformance in the FTSE 100. But I think the more exciting piece is going to be in the bond FX story. We are, of course, watching for Swiss CPI data later on in the show, already seeing some weakness in the euro ahead of those numbers. And then this caught my eye, 2s and 10s. The inversion is uninverting now, only negative by 2 basis points. We're going to dive into the details. The countdown to the opening trade starts right now.
Tuesday, the 3rd of September, the first full trading session of September. The United States will rejoin the fray a little bit later on. Feet are finally back under desks, including ours, I'd like to point out. Anna is back, which is great. So September can get underway. Equity markets are near record highs. The bond market has had a great run. Everything is looking fairly rosy at the moment, but the risks appear to be growing. And September is normally an incredibly volatile month. You've got political risk, you've got geopolitical risk, you've got market risk in the form of the economic story that is developing as well. Look at gold. Look at what is happening there. Look at the bid that is back there. There's some interesting messages, differing messages coming out of the markets at the moment. And Anna, Germany over the last few days, absolutely at the centre of that trade. We've got the Volkswagen story we're watching very carefully. It comes hot on the heels of the political story yesterday. Now we have maybe a kind of indication of just where the stresses really lie.
Yeah, absolutely. And if the vote we saw at the weekend was in any way a reflection of the economics and the struggles that the German economy has been facing, which in part it must be, then we turn to political reaction to this latest news out of Volkswagen. What will politicians say about this, Kriti, is on my mind. Half of the seats on the supervisory board are taken up by Labour representatives. A further 20% are taken up by German state of Lower Saxony, which typically sides with unions. You have to wonder whether this goes anywhere in terms of closing a factory in Germany.
Yeah, and you mentioned Saxony there. That's where Volkswagen's biggest kind of factory plant actually is. So the fact that they're closing it, by the way, after 87 years, the first time in their 87-year history, is a massive deal. This was kind of the winner post-war, historically speaking, and now it seems to be, very much the loser. I think what was interesting here is if you look at the politics, so much of the AfD and even the BSW kind of agenda has been pulling back on some of this investment in renewables, and that includes removing some of the subsidies and some of the incentives that's helping the EV acceleration, clearly not helping Volkswagen's bottom line.
China is the major threat here. They haven't figured out China. China is the threat coming to Volkswagen shores. We thought that this was going to be the big step forward that Volkswagen could make to get itself out of the diesel crisis, which, by the way, is still ongoing.
Yes.
The legal case around that is still not done, which is still something that Volkswagen kind of has in its rearview mirror. This is not working in the way that it was meant to. And you look at the energy crisis and you fold on top of all the other issues that Germany is facing right now, and you wonder what the government that is under such pressure can do to alleviate the pressure. Where does Germany go from here is an open question.
Yes, and at the moment, the politicians seem to be rallying around the workers, and we'll see where that develops. But we know that the leadership in Germany are vulnerable politically, and we've seen that over the weekend. Great big take story out on the whole of the European car sector. So, of course, jumping off this VW story, but focused also on Stellantis, on Renault, on Europe's overall exposure to what they call the twilight of the combustion era, which is what we seem to be seeing playing out in front of us, and certainly the German story front and centre.
Absolutely, and coming at the same time as France.
So link the two. Obviously, the far right is where we see the kind of the connection. Also, political instability is where we see the connection. And again, this comes back to Europe. How does Europe function if it doesn't have at its core Germany firing on all cylinders and France firing on all cylinders? The history of the European Union is based around the axis of these two countries, and they are both struggling. Macron is struggling to find a prime minister. He is struggling to find a candidate that can pass a vote of no confidence. When are we going to see that happening? Yesterday there was a flurry of activity. Today we go silent. Does that mean that this is a prelude to some announcement about to happen? But how stable will this government be? How much longevity will it ultimately have?
Yeah.
Because Europe is watching, and Europe needs these two countries to figure out a way forward.
Yes, and it seems that the extremes in both of these geographies, the extremes are getting increasing attention from voters, and that is putting a strain on these two countries, what they do politically internally, and then, as you say, the roles that they play across Europe. Interesting to see then he's taking soundings from various predecessors then, Kriti. This is Emmanuel Macron, of course, over the last couple of days, from Sarkozy, from Hollande. Maybe we'll see news about Cazeneuve, about Bertrand, around other names that have been thrown around and possible prime ministers. But will any of them last? They will, by their very nature, have to be some kind of compromise candidate, and we'll see how bond markets respond to that, because spreads are still elevated.
So elevated. In fact, we were comparing this not just to what we've seen in the last couple of days, but this idea that you're actually still at levels that you saw back in 2012, the debt crisis. This is my obsession, as we know. This comes right back to the budget, which is regardless of who's the prime minister, when do those spreads actually close? We have that chart here that we're actually at higher levels, even in that threat that we saw in 2017 from the far right, that kind of panicked markets there. We are going all the way back to 2012, and that spread, Anna, to your point, has not closed and doesn't look like it's going to be closing anytime soon.
Yeah, let's just pick up on some of the other geopolitical themes we're dealing with this morning, and a lot of them centre on Israel and Iran. On the Israel side, we see Benjamin Netanyahu under pressure politically, domestically. Does that lead to any change in his policies? We've seen defence stocks in Europe perhaps reacting to that yesterday. More European in focus, we saw the UK decide yesterday, with a new government, of course, relatively new, the Foreign Secretary saying he's halting some arms export licences. This is not an arms embargo, but it's just very specific, around 30 out of 350 licences, components for aircraft, for drones, for naval systems. Because the UK has concluded there is a risk that they are used to commit violations of international law. They are not saying that that has happened, but they are saying there is that risk. And what we focus on now is what kind of response we might get from the White House, because you wonder whether the UK would have made this, certainly not under the last administration, but if they thought that President Biden was remaining in post, are they doing this mindful of what the White House will say or not? The White House, of course, was dark yesterday, or very, very quiet. And then we move on to other geopolitical themes. There is an expectation in European capitals now that we start to see Iran supplying ballistic missiles to Russia. Now, Russia has ballistic missiles already. The people of Ukraine know that very well. But this is another leg to the concerns around Iran, and it could lead to further sanctions on Iran.
Yeah, rallying support on multiple various war fronts. You mentioned the White House. I thought this was interesting. That, of course, remember, this is coming at a time when Kamala Harris has to really rally some of the vote and is coming under criticism that she needs to go further than her predecessor Joe Biden did in terms of making her kind of disdain for the atrocities in Gaza really heard. And that's affecting the demographic that she's attracting. It's affecting her voter turnout in a way that Donald Trump is maybe taking the other side of that and also trying to rally the same people. It's
a similar story in the UK and the United States, isn't it? Clearly, there is the Labour Party has a backbench problem that they need to deal with, and this feels as much to do with domestic politics as it does to do with what is happening on the international front. This has been pressure that has been building within the Labour Party for action to happen on Gaza. Similar story, you can argue, with the Biden camp, what is happening with Harris as well. Yeah. And we saw that with some key constituencies that have been very critical of what has been happening with the United States' policy towards Gaza, towards Israel, over the last few months.
It's a fascinating one. You make that comparison. I'll go one step further and talk about it. When you're talking about the EU and the top jobs as well, they're getting some of the scrutiny, not around Israel and Gaza, but around Ukraine and Russia and the kind of potential sympathies. And we're seeing this again, bringing it back to our first story in the far right in Germany as well. What kind of leaning do you have in that Russia-Ukraine debate?
Does this lead to any change in Europe's stance on Ukraine, at least even if just at the margin? Is there a change in tone, a change in narrative? And how much does that depend who's in the White House?
Absolutely. I thought it was interesting how sensitive defence stocks were yesterday to some of this news. Let's talk about what we've got coming up on the show. We've got some great guests to line you up for September. It's going to be a bumpy one by the looks of things. PIMCO's Nicola Meyer is going to be joining us, talking about what is happening with the European bond market story. Bonds have been really well bid recently. How much further has that got to run? Daniel Murray, Deputy CIO of EFG Asset Management, taking us through the open. We've got the CEO of Sandoz, the world's second largest maker of generics, providing an update on the sector. I think they've got a capital markets day. They're 1 year on from their spin. How are they positioned post-Novartis? Plus, of course, we've already discussed this, French politics firmly in focus. We are going to be speaking to Blanche Léridon of the Institut Montaigne a little bit later on. What should we expect, Kriti, from this next French government?
A lot to watch out for, at least. And I wish I knew what we can expect from the French government. And we're, of course, going to be awaiting comments there as well. But we're also getting comments on the monetary policy front as well. The Riksbank governor is going to be speaking at about 9 a.m. UK time, potentially moving some of the Swedish, I want to say krona? Krona. There it is. 1:45 p.m. UK time, though. We do get the BOE deputy governor speaking as well. That will certainly move cable, and that's going to be something we'll watch. Is it the fiscal that drives the market, or is it the monetary? That seems to be the continuous debate. Plus some U.S. data in focus. The ISM manufacturing index coming in about 3 p.m. UK time. And then, of course, Zscaler earnings, which we don't often talk about. But in this kind of AI frenzy, this is a cybersecurity company. This is a data company. Maybe shedding some light on what those billings in the AI space look like.
That's really interesting, if the AI and cybersecurity link, because sometimes we've seen cybersecurity companies punished at a time when CapEx IT budgets are being spent on AI instead. So we'll see how that kind of business shapes up.
Cybersecurity companies have caused a few problems recently.
Yes, we remember that well. Fortunately, all our computers kept working. But yeah, it was a busy day. So we're looking out for US data. We're expecting that US ISM number to come in, to actually tick up from last month a little, but still remain below 50. A reminder, as if we needed one, that we're still seeing issues with the manufacturing, not just in Europe.
So that number's been bumping along the bottom for quite some time. Tim Ferriere's data showing us actually the manufacturing recession in the States was long-lasting and quite profound. It's interesting, Torsten Slok's out with a note from Apollo drawing a link between rate cuts and how quickly ISM responds and will start ticking higher. And he thinks about 6 months, according to the numbers that he's looking at. So it'll be interesting to see, once those rate cuts start coming through in the United States, how quickly the manufacturing sector responds to the lower cost of capital, how quickly that comes through. It's different this time, but that's certainly the historical precedence.
Yeah, it's fascinating, though, that in the U.S. economy, no one's really paying attention to the manufacturing sector. It makes such a small piece of it that the concerns that are showing up there, to your point, that weakness there, the Fed isn't really talking about it. Corporations aren't really talking about it. That's not where the pain and the tension exists.
OK, so we'll continue to watch all of that data as it comes in and focus on some of those other speeches. What else do you need to know this morning? Some of the other stories that we're covering here at Bloomberg. Hewlett-Packard says it intends to pursue a $4 billion damages claim in London against the estate of the late British tech tycoon Mike Lynch. Lynch was killed in a yacht tragedy last month. HPE won a British civil case over the collapse of Lynch's firm Autonomy and is awaiting a ruling on how much it is owed. The US is laying the groundwork for new sanctions on Venezuelan officials in response to Nicolas Maduro's disputed re-election. Bloomberg has seen documents showing the Treasury Department is close to announcing 15 individual sanctions on officials accused of undermining the July vote. And Bloomberg understands that deformed or degraded fuel lines are suspected to be the reason Cathay Pacific cancelled multiple Airbus A350 flights for fleet-wide precautionary checks. It comes after the carrier discovered a faulty engine component, leading it to abort a flight to Zurich on Monday. So we saw that one flight turn around, and then we saw this announcement, Guy, that they would have to review the flights. And we got this morning's news around what they are reviewing. Inspecting the fuel lines. Are there kinks? Is there degradation, abnormalities in the fuel lines? Seems to be one area of inquiry.
So EASA has launched a formal inquiry into what is happening here. So that's kind of a first step that is going on. Yeah, the fuel lines look like they're at the centre of this. Remember, this is a Rolls-Royce engine. It's an XWB engine. I think it's the XWB 97. I need to check my notes on that.
No, yeah. Right.
And is it the fuel lines or is it the manifold? Now, the manifold distributes, obviously, fuel and air around the engine. So how deep into the engine does this go? It's interesting. You got a very big reaction in Rolls' share price yesterday, but you've got to remember Rolls' share price is up by nearly 100% over the last year. So this has been a really strong run. So any kind of inkling that there's a problem here will be something that I think shareholders will pay attention to after it's been pushed up so high. So IAG fly these aircraft. This is the 350-1000. IAG fly them. Air France fly them, Virgin Atlantic fly them, so they'll all be checking the aircraft this morning.
And we did see some reaction in European time to this yesterday, didn't we? So later in the day, we did see the share price of Rolls-Royce down substantially, 8%, I think, on the back of this news flow.
Yeah, and I should just say, as we're speaking, we're getting still continuous updates coming out of Cathay. So we're expecting those affected aircrafts to resume their operations by Saturday, finding 15 aircrafts with those affected engine components.
So it looks like a relatively straightforward fix. But this is an engine that's had criticism from others. So Tim Clark at Emirates has this is the engine that he's pointed a finger at, saying that it's not good enough, that it doesn't provide enough cycles that he wants, i.e. up and downs. So he's pushed for Rolls to invest much more in this. So Tufan, the CEO of Rolls-Royce, has announced that he is going to be investing a lot more into this engine. But this is a critical piece of kit for the global aviation sector. There's about circa 80 of these thousands in operation at the moment, but that number's going to grow significantly over the next few years.
Yeah, a lot to digest. We're going to be diving into some more of those details throughout the rest of the show as well. Let's talk about what else we have coming up on the show. Emmanuel Macron's prime minister problem as the French president looks to end weeks of uncertainty over the next government. We're going to discuss the market outlook, how the politics connects to the markets. Plus, Aston Martin avails the new Vanquish at the Venice Film Festival. Highlights from our conversation with the executive chairman coming up throughout the show. Up next, though, what risks lie ahead for the markets? Nicola Mai, economist and sovereign credit analyst at PIMCO, is going to join us to talk about just how worried we should be about that French debt. We're going to dive into those details. If you have any questions of your own, get involved in the conversation. IB plus BBTV Go is the function on your terminal. This is Bloomberg.
You're seeing it in French spreads, right? So they've not come fully down to the levels they were prior to the election being announced. So that's telling you that the investors are demanding plenty of risk premium. I think that's likely to stay there, right? Especially given the outcome we had from this local German elections. Perhaps additional premium in German bonds, which have always carried that sort of core bond price action to them.
Elijah, head of fixed income at Newton Investment Management, speaking to the team yesterday. Let's carry on the conversation. We're waiting for a French prime minister. When does that person's name get revealed? And what will that government look like? Nicola Mai, economist and sovereign credit analyst at PIMCO, sitting around the table with us this morning. France is 69.5 over Germany this morning. That's elevated relative to recent history. But is that the new normal?
I think it is, actually. I think pre-election announcement, you were around 50, now you're about 70. I think this level reflects the increased fiscal uncertainty, probably some extra slippage relative to the Commission demands. So I think, you know, given the environment, I would think that we're going to stabilize at a higher level. And sort of interestingly, I mean, if you look at Spain, it's at 80. And if you look at the fiscal metrics in France, if anything, they're actually a bit worse than Spain. Now, France is quite a diversified economy. It's got a better fiscal history. But I think given the fiscal dynamics, I think this is probably a new normal for France.
So is France no longer core, it's periphery?
Well, it depends how you define it. I think maybe it's a weak core.
Weak core. That sounds
What happens
familiar.
when you don't do your Abbott?
This is the fiscal equivalent.
That's still not working out.
Yeah, not enough Pilates.
Yeah, for France. But this sounds, so as we send France back to do more Pilates, this sounds quite fundamental, Nicola, that we're redefining what core and periphery mean in terms of the bond markets. How long-lasting is this sort of new definition?
Well, I think that, look, first of all, I think that fiscal dynamics are worsening everywhere, not least in the U.S. That includes the Eurozone. Now, core and periphery are sovereign crisis type names. I don't really see a sovereign crisis in Europe anymore. I think the fiscal infrastructure has improved with the creation of Next Generation EU, for example. The ECB has asserted its role as a lender of last resort. So I don't think we're going to go back to a periphery that is vulnerable to sovereign crisis. Nonetheless, I think fiscal dynamics are challenged, and several countries, apart from maybe Germany, will see a bit of a higher credit spread, including France.
Okay, so maybe there's no periphery anymore. There's just weak core and other core as well. Nicola, what does the appointment of a new prime minister mean to the French bond markets? Does anything you've said depend on who gets the nod or not?
Not that much, I think. I think this week probably Macron will nominate a prime minister. I think what we're moving towards is a centrist-type grand coalition, a weak government, but one that is not extreme. I think that the tail risks of an extreme far-right or far-left government are gone. So we're going to have what we're going to have is some kind of mishmash coalition, which will be probably deliver some fiscal slippage relative to the European demands, but not a huge one. So that's what I think. I think we're going to have a weaker French sovereign, which is reflected in the current spread. But again, I think the tail risks of an extreme outcome are probably clipped here.
You compare the likes of France to Spain, Italy, the periphery, or the traditional periphery, I should say. So much of their success, though, is based on post-pandemic funds that are still coming through out of the EU. It's based on fiscal spend. But at the same time, we're talking about some very scary budget negotiations happening in the fall. What happens to that outperformance when the money runs out from the government?
Yeah, well, I think the negotiations with Europe are going to be tough. I think many countries are going to be in the so-called excessive deficit procedure, which means that they need to tighten fiscal policy next year by 0.5% roughly. And I think ultimately, I think that some compromise is going to be found. There might be some slippage relative to the Commission demands. But usually what happens is that the Commission and the governments find an agreement, the Commission closes an eye or two eyes, and we sort of muddle through. And I think this time is probably going to be similar.
Closes an eye or two eyes, just completely blind leading the blind. Talk to us about the other side of that trade, which is on the boon side. Given that we've had the elections, or at least state elections, we've got a couple more, I believe, on September 22nd, and then, of course, a potential federal election in the next year as well. There's an argument that's to be had that perhaps that bakes in an extra premium on the other side of that, into the boon side of that. How much validity is there? What might the bond market, what might the boon market be responding to when it comes to German politics?
Look, German politics is also an element of uncertainty. We've had very good performance by the far-right AfD party in state elections. But I think, generally speaking, yeah, bonds remain the undisputed safe asset of the Eurozone. To the extent that there is more political uncertainty, if anything, bonds could benefit.
Is that just because of the debt break, though? Like, does that just eliminate any of that political risk?
I think that, look, if you look at the different countries in Europe, there is no doubt that the strongest balance sheet, at least among the big countries, is Germany. So I think that there is no real challenger to the European safe asset. And I think bonds will be more determined by monetary policy than by politics.
The Swiss might have something to say about that, but we'll come on to Switzerland a little bit later.
I didn't include non-Eurozone.
Fair enough. Let's talk about Powell. And I don't mean Jay Powell here, I mean Lucy Powell, the leader of the House of Commons, warning over the weekend of a run on the pound. Now, she's been heavily criticised for that. What is the outlook from your point of view when it comes to the UK? You're a big fan of the gilt market at the moment. Talk about sort of safe havens. How does the UK stack up?
Look, we like UK duration here. I think there's some mispricing in the market, in my mind. If you look at the terminal policy rate priced for the UK is about 3.5%. That compares to 3% in the US. I think the UK economy has been a lot weaker than the US. Fiscal policy will be tight in the UK, whereas it will be neutral or potentially expansionary in the US, depending on who's elected. So I think there is quite a lot of value in UK duration, and we're overweight UK versus US and outright.
So you're overweight in UK, so no signs of nervousness around the fiscal story in the UK right now?
Not really. I mean, I think the budget will be painful, as it has been stated, and yes. I think we will be. Look, we're still in a hangover from the Liz Truss episode.
Yes. Okay.
And I think UK authorities will be cautious when it comes to fiscal in the coming years.
That's what the hangover will do to you. Okay, thank you very much. Thanks, Nicola. Good to speak to you. Nicola Mai, economist and sovereign credit analyst at PIMCO, with thoughts on European debt markets. Coming up, we continue to talk about the UK. We'll get a perspective on the pound shortly. We'll also take an FX view of what's going on in Switzerland. The FX market, including the Swiss franc, in focus as we await inflation data out of Zurich. More on that conversation coming up next. This is Bloomberg.
"30 minutes from the start of the opening trades across Europe. When you look at the futures picture, it's a little bit lackluster. It's simply this idea that you aren't seeing that much excitement. FTSE 100 futures higher by 0.1%. We'll see what that kind of is responding to, but we are starting to wait and see kind of maybe ahead of what happens in perils. To me, it's all about the bond market. It's all about the FX market, specifically here in Europe, where we are just seeing that Switzerland CPI break. Now, the August core numbers rising about 1.1%. The estimate there was 1.1% as well. When you look at the harmonized CPI rising 1% year over year, this is significant because the estimate here was about 1.2%. And you immediately basically see this kind of almost emphasized idea that rate cuts are needed in Switzerland because they're undershooting even the S&B's target for what those price gains look like in June, even though some of the housing rents and the increases there were actually supposed to show up in this data. Off of the back of this, you are seeing a slight bump up in euros, or slight weakness, I say, in the Swiss franc against the euro, but it is still not enough to to pare back what you're seeing. I want to take a bigger view, though, and talk about positioning here, because the Swiss franc is also not just looking at what's happening domestically, but also looking at what's happening internationally in terms of some of those haven flows. And that's where the positioning matters. I want to get to a chart that caught my eye here and really dive into that. This blue line basically shows you all the net shorts in this market. The white line is just how long the market is. And you can see the short bias that's been going on for the majority of this year that is now starting to get pared back. And that is not necessarily a reaction of what's happening domestically within Switzerland. Again, talking about a little bit of economic slowdown, talking about that inflation undershooting the S&P's target. It actually has more to do with haven flows. The idea that the short position is actually declining. It's a really interesting dynamic that we're seeing in the Swiss franc, and that's where I want to get a little bit more analysis. Bring in Kirsten Kundby-Nielsen, FX strategy analyst over at Danske Bank. Kirsten, a pleasure to have you on the program. Walk us through the Swiss franc story in your view. What is it more susceptible to? What happens with the S&P or what happens with the rest of the world in terms of haven flows?
I think it's a good combination of both. I think, of course, it's important that we have this front-loaded easing bias from the S&P. I think that has played a key role, especially when we look at the beginning of the year, where we really saw the Swiss franc weaken against the euro. But I think it's important to keep in mind, of course, not only looking at what can you say, risk sentiment, but I think this move lower in long-end yields has also played a key role in continuing to support the Swiss franc, especially against the euro.
Well, let's talk about the other side of that trade, which is, of course, the euro, because you have to compare what the Swiss franc is doing to, say, the dollar, for example. You're seeing weakness against the euro, strength. And I'm curious about the euro side of that equation. When it comes to this currency pair, what moves it more?
So I think for the Swiss franc trade, I would say there's, of course, a leg. You have to look at both sides. But I think in terms of the Swissy, it has been very driven by this. I think also at what we saw at the beginning of August, where we really saw this sharp move lower in Euro Swissy on the back of this renewed recession fears.
Let's talk about intervention. Does intervention keep a lid on this currency?
If we look at the data we have so far, the S&P has not been officially, or it doesn't look like the S&P has been officially intervening yet. I think as we are set to the policy rate is set to go closer to zero. I think that Jordan and the rest of the S&P and also Schlegel, after he takes over, will look more at the FX intervention. What we traditionally see is they start using the policy rate first. They also often emphasize that this is the main monetary policy tool, but that we can see a shift towards FX intervention later in the year.
Let's just talk about political instability. We're coming into September with plenty of it in Europe. We've got French political instability. We've got German political instability. It seems to be a theme that is growing and reoccurring. The traditional trade off that is to go and buy the Swiss franc. Is that still the trade that you think will continue? Political instability in the core of Europe, buy the Swiss franc. Is that the logical trade still to make?
I think it is a logical trade, but I think it's important to keep in mind that I think the S&P will step into the market if we see a significant appreciation. So we might be able to get some movements, but I think the S&P is very wary, especially just given that we've seen this downside surprise to the inflation numbers today. They will be very cautious that a strong Swiss franc doesn't first of all, suppress imported inflation too much, but also in terms of supporting economic activity, which is something that Jordan has flagged multiple times here the past year.
Kirsten, does the market need to ramp up expectations of rate cuts from the S&P then, given the inflation print keeps coming in below where the S&P thinks it will and where the market thinks it will come in? And you're talking about how they're acutely concerned or have been very concerned in the past about the strength of the currency. Does the market need to expect more rate cuts?
I think so. I think market pricing is fairly fair, at least when looking at this year. I think it makes sense after the print today that markets will slightly shift in favor of a 50 basis point cut here at the September meeting. I think it is quite noteworthy that the S&P continues to have an inflation forecast, which inflation then undershoots.
Another central bank that's already started cutting rates is the Bank of England, Kirsten. What is your expectation there on the pound? We were talking with Nicola May from PIMCO a moment ago about some weekend commentary from the Labour government around nervousness that there could be a run on the pound if certain decisions around the budget weren't made. What is your assessment of the pound's vulnerability to the budget? We're waiting for that budget in the month ahead.
I think it's definitely important also when looking against the euro. But the thing is, in terms of looking just at the euro sterling, there's a lot of uncertainty going on in the euro leg as well. I think it's important to keep an eye on because I think there's been a ramp up of expectations in terms of now we have a new government in the UK. There's been this really positive thing, both in terms of business investment, but also more investors looking forward to political stability in the UK. So I think now that we're seeing that numbers aren't quite as good, I think it's definitely important to keep an eye on here in a month's time. But I think other forces, namely how the Bank of England acts, how the global investment environment fares here in the couple of months, that's the most important thing for the pound.
I want to follow up on that euro-sterling conversation that you were talking about, because right now it does feel like that outperformance in the pound. I mean, I think a lot of people are kind of waiting for that winning streak to snap, given that relative haven quality that you very much pointed out. I'm curious, though, in the next 6 months, as we see perhaps some of the trade argument, and specifically out of the U.S. change, both in regards to the U.K., but then also to the EU around steel tariffs, around other imports, exports, defense even. Does that change the relative attraction between the pound and the euro?
I think we're in still for some downside in euro sterling. I think the environment where we're in, the global easing cycle is slowly kicking off in terms of what we're seeing from the Bank of England. When we look at some of the speeches that we had at Jackson Hole, namely from Governor Bailey, he seems more cautious about lifting the foot from the brake too soon, at least. We've had the first rate cut. I think that's important in terms of the sterling outlook. I think looking against the euro, I still think there is some topside to the pound here the next couple of months until we really get to see this easing of global financials conditions also going into next year.
Thanks, Kirsten. Greatly appreciate it. Kirsten Kundby-Nielsen, FX strategist, analyst at Danske Bank, joining us initially on the Swiss franc, but keep an eye on the pound. It's a really interesting Bank of England meeting coming up, I think. What are we going to talk about next? There's a few stocks that we need to be paying attention to this morning. Rolls-Royce looks like it's still under pressure this morning. This after Cathay grounds its 350 fleet. We've got a fuel line concern relating to a Rolls-Royce engine. We're going to talk about all of that. That's coming up in just a moment. This is Bloomberg. Aston Martin has a new model, newish. The Vanquish is back. It's a name we all know from many, many years of covering this company. Executive Chairman Lawrence Stroll telling Bloomberg how this car, though, the new version of it, will be critical to the company's lineup.
The 10,000's and that's the magic number, because that brings us the $1 billion of EBITDA and 500 million of free cash flow that I spoke that I would be delivering several years back. So it is a timely process to bring these cars to life. Nothing ever happens fast enough for me.
It's very pretty. It was unveiled in Venice, which appeals to many people. It's designed to take on the Ferrari. But take a look at the Ferrari share price and take a look at the Aston Martin share price. They've been moving radically in different directions.
They tell very different stories, don't they? There were no cars in the background of that shot. There were only gondolas. I find that curious.
That's interesting.
That's an alternative mode of transport if you don't fancy a Ferrari or an Aston Martin, apparently. But you've been looking at this chart. I mean, it sort of tells its own story, doesn't it, Guy?
So look at Ferrari. Look at the rise we've seen recently on the right-hand side of that chart. This is a company that has done very, very well this year. It's got a new car out that apparently is selling well, the Cylindri, which is basically a V12. This Aston Martin is designed to take that car on. But look at the Aston Martin share price. They have a margin problem, basically, at Aston Martin. The company's... The top line is OK. Kind of what is happening in the middle is where the problem lies. They're very pretty, but in terms of the financial performance, it doesn't translate into a beautiful chart.
Someone told me that actually, I think Matt Miller, our anchor in the United States, told me that it's not about how pretty it looks, but the sound it makes when you drive it, or like accelerate. Yeah. But I haven't figured out, do you want a more aggressive sound, or do you want like a smooth ride? Like I haven't quite.
I'm sure I know which side Matt Miller comes from.
I know exactly where Matt. So Matt, big V12. Matt's going to be very happy with
that. That's my contribution to the car conversation.
Excellent, excellent. Well, they are appointing their fourth CEO since Stroll arrived, aren't they, over at Aston Martin?
Yep.
Yes, exactly. Adrian Hallmark coming in from Bentley, and so that's the latest hope, is that he manages to do something that turns this.
They've got to fix the margin problem. So if you analyse this company from a credit point of view, that is where the issue lies. If you analyse it from a car point of view, that's not where the issue lies. But from a credit point of view, they've got to get this company to be more efficient. They've got to stabilise the base and figure out how to make a better margin, because that's what Ferrari is brilliant at.
So from the upper ends of the upper echelons of the car market, let's go to something a little more mid-market, shall we? And the subject of today's Bloomberg Big Take, it digs into Volkswagen's historic move to consider a factory closure in Germany for the first time in its 87-year history. This as EU car makers lose ground to Chinese manufacturers in the race to produce EVs, and that loss is taking place in China and at home in Europe. Let's get more with Bloomberg's EMEA Auto Industry team leader, Elizabeth Behrman, who is with us this morning. Elizabeth, good morning. So, fascinating Big Take story, of course, building on the news we've had out of VW over the last 24 hours. What does this news say about the state of the car industry in Europe and its ability to pivot toward this newer technology?
So this news from VW was certainly a shock to the system, although not completely unexpected in some quarters. VW is, of course, Europe's biggest car maker, and they have been, as we know, struggling to make the transition to EVs. They've also have been telling us about savings programs that are particularly targeting the VW passenger car brand that's been lagging in terms of profitability versus peers. What's driving those changes is, of course, VW's struggles in China, where it's got to be said their EV model range has been falling flat. And now we're getting a protracted slowdown in the EV transition also in Europe, after a number of governments removed some of the buying incentives. VW probably has the most work to do, just through their sheer size here on the continent. But what's new here is that they're targeting their homeland, where historically it's been the hardest to push through major changes. So what VW told us yesterday is really what their VW brand CEO said a few months ago: the roof is on fire.
Well, Elizabeth, it feels like it's quite much easier to have closures than to ramp up production. But walk us through just how difficult these closures are, given so much of its kind of biggest plant and biggest production happens out of Saxony.
For VW, it's going to be very difficult to push through closures in Germany and in Lower Saxony. And that's because of the setup at the company, which is not completely unique to VW in Germany. Large corporations in Germany have significant representation of workers on supervisory boards. So you have to win those people over to push through big decisions such as this. In VW's case, it's even more complex, because the state of Lower Saxony holds a significant stake, meaning they also have seats on the supervisory board, and the state of Lower Saxony tends to side with the worker representatives.
What about Berlin? How is the German government, how is the coalition going to react to this?
Well, the coalition is pretty busy also digesting Sunday's shock election results from two state elections, where the right-wing Alternative for Germany delivered the latest blow to that coalition. Initial official reactions were somewhat sparse, I'd say, just saying, well, there are issues on competitiveness, but any decisions have to involve talks with the social partners. But underneath, this will be big news and perhaps a wake-up call also to the issues that come up again and again. Too much bureaucracy, and specifically to the car industry. Germany's decision to suddenly remove EV incentives late last year, when the coalition had triggered a budget crisis.
Elizabeth, thank you very much indeed. Fantastic big take today. Perfectly timed. Elizabeth Berman joining us out of Munich on what is happening at Volkswagen. Let's talk about what is happening in the wider markets this morning. We're joined now by our executive editor for Markets Live, Mark Cudmore. Mark, has the dollar bottomed? It's been up over the last few sessions, and I'm wondering whether it's turned the corner.
I don't think so. I have to say I'm struggling to get conviction this week. As you know, I remain kind of structurally quite bullish overall on equity markets around the world, and I still think that too many rate cuts are priced into the curve this week. But I do accept that going to jobs data this week, there's probably potential for dollar to bounce a bit further from here. I think if it's a very strong number, well then suddenly we've got still some rates priced into price out, and that will support the dollar. And I think if it's a very weak number, I think the dollar will still benefit a little bit from haven demand. So, look, I don't think the dollar is bottom for the year. I think the dollar overall is probably, we've seen the peak for the year, but earlier on this year, I think dollar's got more downside ahead over the next 6-8 months. But at the very short term, I think it's really, really hard to have any conviction in either direction.
Well, Mark, on that haven demand story, is it still the haven going into the U.S. election compared to, say, the Swiss franc, the Japanese yen, gold? I'm going to even throw the pound in there, just given its outperformance. Would you still call it that?
Yeah, it's a valid question, Kriti. I think that there's kind of two different aspects, like types of haven. One is the fact is the dollar is still the world's reserve currency. When there are extreme deleveraging events in markets, that still means that people retrench to the world's reserve currency, which means the dollar. And the dollar's not losing that aspect anytime soon. So it'll always be a haven in extreme scenarios. Is it the first turn at the moment as a haven? No, probably not. And I'm with you kind of in the implication from your question that the election won't probably be a good story for the dollar. And I do think that part of the reason that I think the dollar ultimately is probably starting another long-term kind of whiplashy downtrend, bear trend, is because the election will be negative. Both parties are going to ramp up the fiscal side, and I think ultimately that will weigh on the dollar because there's such large twin deficits, the current account deficit as well as the fiscal deficit.
Mark, looking ahead to the European session, we have pressure on commodity markets of various forms through the Asia session. I see steel prices are weaker, iron ore prices down by 2.8%, copper prices down 1% through the Asia session. Another day of worrying perhaps about the Chinese growth story, or is that all in the price from yesterday?
So there's a lot of gloom out there. Commodities absolutely are trading very negatively, a very kind of bad message on Chinese economy and the global economy. So that's one aspect. And I think, we're seeing cross-yen weekend, which is again quite a negative story. On the flip side, equities still are near record highs around the world. So which is right? I am in the camp that for once equities are probably better and being optimistic. But I'm wary about that negativity out there. If you want to spin it positively, so much bearishness makes it easier to be a bull.
OK, Mark, thank you very much. Bloomberg Markets Live Executive Editor Mark Cudmore with his thoughts on the markets. 8 minutes then until the start of European equity trading. If you want to keep across the thoughts of the Markets Live team, MLI Vigo is available to you on the Bloomberg terminal. Let us get an update on individual stocks that could be on the move. Lizzie Burden is here. We've talked a little, Lizzie, good morning, about the airline sector already this morning. Take us through your thoughts.
Yeah, I want to start with that Cathay Pacific story, Anna, and the impact potentially in European stocks this morning. So it's reportedly it's had to cancel some of its flights because of this precautionary inspection of its entire Airbus A380 fleet because of discovering engine issues on the long-haul plane. That engine is made solely by Rolls-Royce, and therefore it follows that we need to watch Rolls-Royce shares this morning. The stock reaction really going to be interesting, given its shares have really surged over the past 2 years on this optimism that it's a well-run company, that you've got the company more disciplined on costs, more focused on lucrative programmes. And, of course, we also need to watch Airbus. But if we flip the board, we can see the European carriers of this fleet potentially could get impacted today. We've got Air France. It has 34 of the model. And we have IAG, the owner, of course, of British Airways, which has 18 of these jets, and Iberia, which has 22. Just flipping over to my favourite stock, Rightmove. I've spent far too much time on the property portal. We know that Murdoch is on manoeuvres. Rupert Murdoch's REA Group in Australia potentially looking to a possible cash and share offer. It's got till September the 30th to put an offer on. And today we learned that Rightmove's working with UBS and Morgan Stanley on its response to the deal. It was the biggest gainer on the stock 600 yesterday. Let's see the moves later on today. Just finally, turning to Ashtead, we've had earnings out of the industrial equipment rental company today. It's London listed. Interesting that there doesn't seem to be an update in these results this morning on the firm's reported consideration of moving its main listing over to the US. But in terms of these results, a slight miss on first quarter revenue, a beat on pre-tax profit, and the news that the CFO is going to retire in September 2025. Shares down 1.9% year to date. Let's keep an eye on the market reaction later on.
All right, Lizzie Burden, we thank you so much walking us through some of our stocks to watch. There's plenty of others. We still got the Watches of Switzerland confirming their guidance, some by the fast fashion companies reacting to those unique low sales as well. We're going to have it all for you. Futures pointing marginally higher, slight outperformance in the FTSE 100. The opening trades across Europe is next. Stick with us. This is Bloomberg.
So the US has been out for 3 days. Yesterday it was closed. Labor Day, we're coming back today. This chart is a bit of a mess, therefore, in terms of kind of giving us some analysis as to actually where we are likely to go. I think probably the basic spin off this chart is that actually we're not going to see much clear direction out of the Friday session into the Tuesday session. And that, I think, probably Kriti is reflected in the futures.
Labor Day in the States, we were still working, and now the futures are kind of catching up, and that's where all the action is. NASDAQ 100 futures down 0.3%. It's kind of down by the same margin that the FTSE 100 is outperforming. Not a massive margin, perhaps pulling back, guys, some of that optimism that you were just talking about. I will point out, though, the Eurostoxx 50 futures, even though net are about flat right now, Anna, you are actually seeing some underperformance in the likes of Spain, a little bit underperformance in the likes of Switzerland. How much of that is more the macro rather than the micro?
Yeah, absolutely. So that's the futures picture then, looking a little mixed this morning. In terms of the individual stories and to the micro that you point out, the aviation sector will be in focus. We've been discussing this all morning. Cathay now inspecting the fuel lines that go to this very specific engine type on the A350. Will other airlines that operate the same engine type have to ground airlines to do inspections? Could that be short-term disruptive? Even if that is all it is, it could be short-term disruptive. Let us move on to Rightmove. As Lizzie was telling us earlier, awaiting possible other bids here. Has the action by Rupert Murdoch and co opened up interest in Rightmove elsewhere? Berenberg talking about a valuation of 8.30 pence. That is well above where we trade right now. And Ashtead maintaining their guidance, despite the fact the numbers look a bit mixed. News on the CFO. We'll see if that one ticks down a little. No news on where they want their listing to be eventually. There has been talk, Guy, about whether they would move to the US.
Yeah, we'll keep firmly across that one. Let's talk about the opening trade. It is upon us. First full session of September. Here we go. Let's see what the initial numbers look like. Remember, volatility is very low. The VIX is very low. We're looking for a catalyst. The US was out yesterday. Does it come in the form of the data out of the States a little bit later on today? The ISM. The data picture builds throughout this week as we work our way towards that payroll number. The initial expectation is that we're not going to see much action at the get-go of trade here this morning, and I think that's probably what we're already seeing. Stock 600 is open. I don't see a FTSE on that board, so I can't tell you what is happening with the London market. I've got the Italian market, which is up by 0.2% of 1%. The CAC's up by 0.2% of 1%. The IBEX is up by 0.1% of 1%. We'll wait for the DAX. We'll wait for the SMI. Keep an eye on what is happening with the mining stocks this morning. Keep an eye on Rolls-Royce. Will it bounce back? Does this situation with the Cathay fuel lines look as serious as initially maybe first expected? Let's talk about how the single stocks, how the sector story is breaking down. Anna, Kriti, what are we watching?
Well, I'll fill in the gaps on the FTSE 100. Marginal move by 0.1%. Guy, you're not missing out on much there, but you are seeing some underperformance coming from the miners. This is, Anna, something that you had telegraphed earlier when we're talking about kind of that pressure that you're seeing in the macro space in the metals, now showing up in the stock market.
Yeah, absolutely. So we have a day where basic resources is the worst performing sector across Europe, and that typically does weigh on London. So the FTSE 100, yes, it's up 0.1%, but the basic resources sector is down in Europe, down by 0.7%. That's by far and away the worst performing sector. Anglo-American in London down by 1.4%. Antofagasta, the copper miner, down 0.9%. So we are seeing ongoing concern about the global growth story, about China. That was the subject of a lot of the conversation yesterday, I know, but it seems another day two of our concerns this week around the China growth story.
Yeah, and we should also talk about kind of the underperformance in the broader stock 600 as well, also showing up in the tech sector. I'm curious how much of that is China as well, but it's also something you're seeing, and Guy, we were talking about this earlier with the NASDAQ 100 futures pointing lower. ASML is one of your biggest weights, right alongside the companies Anna was talking about, Rio, Glencore, EQT, and BP, et cetera. And then you even got a little mix of biotech in there, Roche and Novartis, both weighing on the index.
A little bit of weight there. Nova's coming back. I always wonder about the portfolio effect. You get kind of one down, one up. It does seem as if it works within the healthcare space. LVMH, though, to the China trade is bouncing back. We saw some weakness there yesterday. We were concerned maybe that was part of the China story. That's coming back a little bit. In fact, we are seeing other healthcare stocks looking a little bit better as well. So Astra's not having that bad a day. Rolls-Royce, though, is the standout story on the upside in terms of the points performance. That stock is up by nearly 4%. At this point, maybe the market is taking a more positive view of what is happening with the XWB on these 350s. If it's just a fuel line, that feels like it could be relatively straightforward to fix.
Yes, and if it is something that they can identify, they can fix, they can do it quickly and get the plane back in the air at Cathay and stop too much disruption elsewhere. And we saw this stock under a lot of pressure yesterday. It was down at one point by 8%, wasn't it? So if it is bouncing, back by 3.6% today, as if a lot of that's been priced, too much priced perhaps to the downside.
I want to go right back to this biotech sector. I mean, you talked about Novo Nordisk to the upside, but Roche and Novartis are both taking a little bit of a hit this morning, and I'm curious maybe why that is. They're both quite heavy volume stocks that you're seeing as well. But, by the way, I should say downside weighing on the Swiss market as well. And we also got that Swiss CPI data.
With the FTSE 100, sometimes you get the currency translation effects. Is that maybe what we're seeing here this morning? I'm not entirely clear that is the reaction. Sanofi is also seeing some weakness as well, so that would maybe disabuse us of that idea. Yeah. But it's interesting that Novo is kind of positive and the rest of the space is negative. Yeah. We're going to be speaking a little bit later on to Sandoz, I think, so we'll get a take on what is happening with this space in a little bit more detail. Yeah,
we absolutely will. And I should just mention, as we talk about the biotech sector, every other regional index is in the green except for the Swiss market, of course, being dragged down, again, by those names that I mentioned. Let's talk a little bit more about the macro here. What is driving those markets? What looks like a good buy? Daniel Murray, Deputy CIO and Global Head of Research over at EFG Asset Management, joins us around the table. EFG AM managing approximately $25 billion as of March. A pleasure to have you. Welcome. Good morning. Walk us through kind of where you buy here. It kind of feels like, from a valuation point of view, the U.S. looks overbought. Europe looks overbought. You could throw Asia in there as well. Where do you go?
Yeah, it's a really good question. Obviously, it's been a phenomenal year for global equities, really strong performance. There's this phrase that equities climb a wall of worry, and I think that's described well what we've seen this year. So lots of concern over interest rates, lots of concern over global growth, and despite that, actually, everything's held up pretty well. And we've seen markets tread this really fine line between growth that's strong but not too strong and rate expectations that have mellowed a bit. I think now we're in the sort of position where, obviously, come back from Labor Day, going to see a big focus on the Fed meeting later this month, and of course the US election is coming into sharper focus. So lots of sort of factors are going to push and pull markets over the next few weeks. But I think underlying this, it's still that sort of assumption that the markets will maintain the sort of Goldilocks environment of growth that's not too strong and rates that are coming down but not too quickly.
How does that show up, though, in Europe? Because it feels like globally, to no one's surprise, you are seeing so much of the focus on the consumer resilience of the states, what tone the Fed sets as well. But there's an argument that so much of the European indices are really a catch-up trade to the U.S., given that so much of the revenue comes from there. When does that catch-up trade either accelerate or drop altogether? Where do we see more movement? there?
So look, I think the really big picture, obviously there's a big valuation gap between the US and Europe because, the US has done so well this year. But I think you've got to look at the internals. And obviously a part of that is the fact that the sector weightings in Europe and the US are very different. So tech and telcos make up sort of about 40% of the US market, and it's about a third of that in Europe. So the fact that tech and telcos have done so well this year, obviously driven in part by Mag 7 and AI, that's been a large factor that's contributed to the outperformance of the US over Europe. So of course, if we see that market rotation continue, then what you'd expect to see is that some of the sectors that are more heavily weighted in Europe will do a bit better, and that should help European markets to catch up a bit.
Yeah, do you think that there is a possibility that Europe can catch up a bit then? Because, Daniel, we were looking at some of the headwinds faced by the auto sector earlier on, talking about VW, but then broadening the conversation to the auto sector broadly in Europe. And it seems to signify so many of the issues, a reliance on cheap Russian gas, a failure perhaps to pivot quickly enough to the new technology and to leave space open to Chinese competition. That just seems to tell a story that is, yes, about autos, but wider as well. And is Europe then in danger of not being able to catch up with US stocks?
Look, I think Europe has some challenges over and above the US. Growth is structurally slower. There's more regulation. Obviously, just physical proximity to parts of the world that are experiencing wars and geopolitical risk just make, European markets a little bit tougher. And of course, Europe has a much bigger trading relationship with China than the US. And so given problems in China and tensions politically between China and Europe and China and the US, that also creates headwinds for Europe. So I think there are reasons why you would expect to see European markets lag, but then it's a question of what is a discount that you would apply to Europe. And I think probably it's gone a little bit too far.
And broadening the conversation, you seem quite, relaxed about the prospect of rate cuts and, stocks might or might not navigate that well depending on what the drivers are for those rate cuts, how weak the labour market gets, for example. What are the biggest risks to your view, do you think, on the US economy and where the rate story goes? What's the thing that worries you about the stance?
So, I think this is really fundamental to what's going on in markets at the moment. We've seen rate expectations have been hugely volatile this year, and markets have sort of responded as those expectations have moved around. I think markets need to be careful what they wish for to some extent. So if rates decline by a lot and very quickly, then that would typically signify a very weak macro environment, and that usually isn't a very good one for equity markets. So what markets would like to see ideally is an environment where rates are coming down gently, reflecting just a more benign inflationary environment, but growth is still reasonably robust. So the answer to your question is that the big risk really is that we see the US economy slow down, hit a tipping point, and actually dip into recession. And actually when that happens, it can happen really quickly, just in a matter of sort of 4 to 6 weeks. Very hard to anticipate, but I think that's the big risk.
So do I buy stocks on a 25 basis point cut and sell stocks on a 50 basis point cut?
I think that's probably quite a good way to think about it, in that if the Fed feels panicked enough to accelerate its the pace at which it's easing policy, then it probably signifies that the macro environment is a bit weaker. And remember, we had a little bit of a taste of this at the beginning of August, where markets saw actually what was a reasonable non-farm payrolls number. But actually there were then concerns associated with the weakness of the economic environment. So I think that's right. I think if the Fed is forced to cut too quickly and by too much, then that would signify much greater concerns about the deepness of any.
And do you think the highs are in for stocks this year?
Look, it's always very hard to make these sort of broad statements about when markets are going.
But a lot of people are talking about rotating into bonds. And people have started to do that. Do bonds outperform equities? So is the tide beginning to turn on that?
So I don't think that's the case, and there's a few reasons for that. So firstly, obviously September's usually seasonally a weak month. There's going to be a particular interest and sensitivity around the Fed's meeting at the end of September. And plus the fact we've got the US election. So lots of different random factors that are likely to cause some short-term volatility over the next 4 to 6 weeks. But I think actually typically, we see markets perform very well in the fourth quarter, contingent on us seeing, it doesn't have to be a rampantly strong economic environment, but a reasonable economic environment in which labour markets stay reasonably robust. Actually, I think equities will perform well. And I think, the downside for bond yields is limited from here.
Great to see you. Thanks for stopping by to see us. Daniel Murray, Deputy CIO and Global Head of Research at EFG Asset Management. Thank you very much indeed. We were talking about Aston Martin a little bit earlier on, talking about how Ferrari's been having a good time of things. Let's take a look at what the Core 6 looks like. Ferrari's back in the green, which I always think is wrong, but it should be in the red. But anyway, they probably don't want that to happen. Ferrari is up this morning. In fact, broadly, you can see most of the Core 6 in Europe are tracking a little bit higher, with some weakness in technology, though ASML and Schneider moving in different directions. It's interesting. We were talking about some of the pharma stocks being weak in Switzerland this morning. Nestle is seeing the exact opposite, so maybe some safety trades coming into the market at the forefront of this morning. Let's find out what other single stocks we need to be watching. Lizzie Burden has got all the details.
Well, Guy, we're looking at the Cathay Pacific story, of course, this morning, and looking at Rolls-Royce and Airbus because of their involvement in it. Cathay cancelling these flights because of the engine issues on a long-haul plane, the Airbus A380, whose engine's made solely by Rolls-Royce. Now, we saw the market reaction yesterday, Rolls-Royce taking an absolute hammering, and a lot of the movements today are a reversal of yesterday's moves. So Rolls-Royce up 3.5%, one of the biggest gainers, actually, on the stock 600. Airbus up 0.2%. Air France up 1.2%. IAG there, of course, the owner of British Airways and Iberia, which are operating some of these A350s, both also up as well. If we flip the board, we can look at Rightmove. We had this news that Rupert Murdoch's REA Group is considering a possible cash and share offer. Today, we report that UBS and Morgan Stanley are now working on a response to that offer. We had the shares up 27% yesterday. And so, again, we're seeing a bit of a correction, down 1.4% this morning for Rightmove. It's actually one of the biggest fallers on the stock 600. Just flipping the board, we've got Ashtead reporting results today. Another of the biggest gainers on the stock 600, currently up nearly 3%. Indeed, industrial goods and services is one of the best performing sectors across Europe this morning. A slight miss, though, on first quarter revenue, but a beat on pre-tax profit, and this announcement that the CFO is going to stand down, retire next year in September. And just finally, Watches of Switzerland also reporting earnings today. The shares up 5.7%. Traders liking these results. They say they're on track to deliver fiscal targets for 2020, their targets for fiscal year 2025, and that demand for its key brands in the US and the UK is still strong, and so that is the reaction to Watches of Switzerland's results this morning.
All right, Lizzie Burden, we thank you so much for walking us through some of those early movers about 13 minutes into today's session. Coming up, we're going to dive into the story in pharmaceuticals, the race to develop generic anti-obesity drugs heating up. We're going to talk exclusively to the Sandoz CEO, Richard Saynor, joins the program nearly a year since the generic pharma maker was spun off from Novartis. Stick with us. This is Bloomberg.
Welcome back to the opening trade. We are 17 minutes into our European trading session. We see a flat picture for stocks overall, a bit of brightness coming through on, where is it? Well, maybe the German market, but elsewhere pretty flat across these European stocks, waiting for the US to come back into the equity market later on today, of course. Let us talk about the pharmaceutical sector. It's almost been a year since the Swiss pharma giant Novartis completed its spin-off of the generic maker Sandoz, with shares in the new company up some 50% since the listing. Let's speak now to the CEO of Sandoz, Richard Saynor, who joins us this morning from Switzerland. Richard, nice to speak to you. I think you've got a capital markets day taking place today, so a lot of messages, no doubt, for shareholders. It's been about a year then, almost a year since the spin-off. Have things developed in that year as expected, or have you been surprised by any of the market developments?
That's a great question, and good morning. It's a pleasure to be here. I guess broadly, today we have, as you say, we have a capital markets day. It's a chance to reflect on the journey that we've had over the last year. I'm pleased pretty much all of the commitments that we made this time last year in New York and London that we've broadly delivered on in terms of our filing. I think the biologics growth has been a little bit stronger than we perhaps anticipated. But directionally, strong momentum, and certainly for our first year, really pleased with how it's played out.
Looking at your generics portfolio then, where is the focus, Richard? What is the message around growth? Where do you want to grow the business that you'll be taking to shareholders today?
I think the key, I think we said this time last year, we expect about $3 billion of new growth coming from our launches over the next 3, 4, 5 years. Half of that we see coming from the biologics portfolio. So we have a record number of biologics and biosimilars we intend to launch over the next 5 years. And the other half actually still coming from small molecules. So sometimes we tend to spend a lot of time talking about the biosimilars, but the smaller molecule portfolio is still a growth driver. And also encouraging, half of that growth is going to come from our US business, which for many years has been relatively flat or negative. So now seeing a really nice, strong return back to growth as we launch, particularly the biosimilar portfolio into the North American market.
Richard, it's Kriti in London. How much of that North American portfolio and that generics portfolio that you just outlined centers around anti-obesity drugs?
In the midterm, going very little. So particularly GLP-1s. For the diabetes indication, really the first launches don't happen in regulated markets until, I guess, the early 2030s. The only exception to that is going to be Canada, where semaglutide, Ozempic, its patent expires around 2026, so we'd expect the first entry around that sort of time. And then a number of the emerging markets, so things like Brazil, etc. Again, semaglutide starts being launched around that time in 2026, 2027. It won't be until the 2030s that you see the European and the US markets opening up to greater competition in semaglutide, and then tirzepatide, Mounjaro, doesn't actually come off patent until I think 2035 plus or minus in the US and the European market. So this is going to evolve over many times. But in terms of our guidance, the GLP-1s as a class, it wasn't included. So in a sense, it's now an opportunity that we're considering how to characterize and then bring to market.
Well, Richard, you talk about that in terms of your kind of midterm guidance, and you lay out that this still may be a decade away. But what do you need to see to get more excited about the opportunity, given that this is an industry that really thrives on that first mover advantage? What do you need to do, and what do you need to see to say, we want to be that first mover?
No, it's a great question. And as I say, that's why I raised markets like Canada and Brazil, because I think that's our opportunity basically to learn about this space, understand, the dynamics of this category of drugs are unparalleled, how we see that evolving. So our focus at the moment is to be at market formation in Canada and market formation in markets like Brazil. But it's worth pointing out, Canada actually is the second largest market for GLP-1s globally. So it's quite a significant opportunity. So that's where our focus is. And predominantly doing that with a mixture of our in-house capabilities, but also then using a number of strategic partners to make sure that we're in a position to launch.
Richard, should I think of the company as being a generics business? Should I think about it being generic? This is a reasonably commoditized market space. How do you make Sandoz stand out?
It's a good question, but I think, first of all, where is our moat? I think we have two moats. Europe, particularly. We're by far the largest player across Europe. Actually, it's an incredibly difficult market to enter. It's nearly 40 markets. A lot of the Asian competitors have been trying to enter the European market really for the last 2 decades and have consistently failed. So I think our strength and capabilities there play out. The second is our development and technical capability. I think we have a scale to allow either working with partners or in-house to bring assets, particularly complex injectables and biosimilars, to the market that many of our competitors just can't do. And then thirdly, our commercial engine. So if you look at a market like the US, because of the scale and the relationship that we've built, really I'm delighted with the performance that we've seen with our drug, Hyrimoz, our adalimumab biosimilar. I think today we have about an 80% share of the available biosimilar market. So again, under fierce competition, we've been able to compete and make sure that we have a strong position. So I think it's a combination of those things. And I think really, again, today at the Capital Market Day, it's an opportunity to explain that to our analysts and our investors in terms of what that is. So, yeah, I think people think about generics as being commoditized. So much of our business isn't. We were the first company to launch a biosimilar, I think, 18 years ago, human growth hormone, Omnitrope. Today, we're the largest supplier of human growth hormone. It's still growing. It's still extremely profitable. And we're serving patients all over the world.
So is the secret sauce the relationships rather than maybe thinking about how the drugs work? You've pushed through with the pharmacy benefit manager strategy in the States. That appears to be working. Is that something that you can replicate? That's about the relationship rather than maybe thinking about necessarily the actually underlying compound. Is that a similar story in Europe? You talk about how hard it is for others to access this market. Is that about relationships, understanding the regulatory landscape? Is it about the drugs, or is it about what goes around the drugs and what you've developed over the years in that space?
Yeah, it's a nice way of expressing it. In a sense, it's the ecosystem. I mean, the drug, in a sense, goes through the regulators. So, in a sense, that's predetermined. So, other than our intrinsic quality as a company and what we bring to the marketplace, ultimately, it's our scale, it's our relationship. And in Europe, we're one of the largest immunology players. So, when we launch a drug like ustekinumab in that market, again, we're seeing a strong take-up because we have the relationship, we have the scale. Also, we don't need to invest in additional sales force. We can leverage the infrastructure that we have. So, and similarly in the US, when we look to launch ustekinumab, Pyzchiva in the new year next year, again, we can leverage our infrastructure and the relationship. So I think that plays to our scale. It also means that when we don't necessarily always develop drugs in-house, we find partners who want to work with us, because we have this unique ability to bring scale, to help them register the product, go through the legal hurdles, and then ultimately the bit that everyone generally forgets because they think generics are easy to sell is the commercial infrastructure, our real firepower in terms of that relationships, as you put it.
Interesting, thinking about what it is that keeps that moat around generics businesses, Richard. I'm also wondering about use of AI, and give us a sense of how you have used it or how you plan to use it. Is this about discovering ways to make generic drugs? Is this about getting things to market quicker? Where is it going to be most useful?
I mean, we already use it. We've been using it for a while, particularly around sort of predictive analytics, about how you predict tender wins, how you forecast your product. I mean, at the end of the day, we have something like 28,000 different items in our inventory. So how you forecast that, how you build inventory around that is one area. In terms of development, it's all about speed. I think your comment earlier on about you need to be there at market formation, so important in our business that we're there. So anything that can give us the opportunity to speed up our development timelines, our registration timelines is an area. And also ultimately how we then just leverage the whole system within our business, how we forecast. We do a lot of our financial planning using AI analytics to think about how we budget, how do we allocate resource, and think about the business. So really every bit of the business, we see opportunities, and clearly as we now become a standalone company away from our parent, it's an opportunity to really double down on those technologies.
Certainly something we're going to be keeping an eye on. Richard Saynor, the CEO of Sandoz, we thank you so much for joining the program, giving us a little bit of insight into what those plans actually look like. It's a fascinating one as we talk about the rollout of these biosimilars, specifically given the regulatory environment that we may see change over in the States.
Absolutely. We'll look forward to seeing how the next election really changes this landscape, and it could quite significantly. Such a huge market. Interesting that they're kind of that he's talking about the fact that actually there's a big opportunity still there in the United States. You would have thought, given the scale of that market, that would have been one that already would have been huge, but they're big in Europe.
Interesting to your point, the moats around the business are not necessarily about what's in the bottle or in the injectable. It's about the business that goes around it. Coming up, we'll talk about French politics. Who is heading to the Elysee Palace? We wait for news. This is Bloomberg.
Welcome back to the opening trade. We're at 30 minutes in today's session, seeing green on the screen in most of the indexes, not by a massive margin, no major outperformance, although the French index does seem to be running ahead. A lot of that's going to be the luxury names pulling forward, perhaps some of the declines from the Chinese data that we saw yesterday that read through. I will mention the Swiss market is underperforming. Some of the biotech stocks are under pressure. Looks like some downgrades and price targets coming over in Novartis bleeding into that sector. Nevertheless, the outperformance in France and what's going on in the country is, I think, where I want to go next here. In France, President Emmanuel Macron has met with ex-socialist premier Bernard Cazeneuve and conservative politician Xavier Bertrand. This as he looks to finally name a prime minister in an effort to end weeks of uncertainty of the country's next government. Let's get a little bit more insight here. Blanche Laridon, editorial director of the Institut Montaigne and former advisor to the president of the French National Assembly, joins us this morning. Blanche, a pleasure to have you on the program. Look, we've got a lot of names in the mix. A lot of directions that President Macron could go. I'm curious of just your initial take on the situation here. We know what's at stake. Where do you see President Emmanuel Macron maybe leaning towards?
So we are actually going through a highly unusual moment in French politics since the dissolution. And these are unprecedented times for us. So President Emmanuel Macron is faced with the hard task of appointing a new prime minister, but actually our constitution offers little guidance on this process, imposing absolutely no restrictions on timing or political affiliation. So he still wants to show that he is the master of the clocks. So as he has always done, President Macron is taking his time. And as you said, various names were put on the table. There's a new name that was circulating last night. The name of Thierry Baudet is actually the president of France's third assembly, the Economic, Social and Environmental Council. He was a primary school teacher, former president of a federation of non-profit health insurance companies, with experience working alongside business leaders and labor unions. It's close to the left, but actually we don't know if he is going to be the next prime minister. There is lots of confusion, and we are still waiting for the president to announce this new prime minister.
Blanche, as we get into, and I will come back and circle to kind of the details of those negotiations, but I'm curious what this means, just taking a step back here, about the criticisms that Emmanuel Macron is actually facing right now, both from the left, which he had initially aligned with, and from the right as well, in that he's not actually justifying or giving a voice to the representation, to the voting of the people. What does that criticism look like? Is he losing credibility as president?
I think that the main topic here is not its credibility, but it's political distrust in France. So we know that all the time spent arguing about name and casting is time that is wasting on seriously addressing the reforms needed from the country. And one reform is our political system and our way to vote. And I know that we have this huge survey with our partner, the polling institute Ipsos. We have surveyed over 11,000 French citizens over the past few months to gauge their perception of the current political landscape. And we are seeing an unprecedented level of distrust among voters, particularly among Rassemblement National supporters, with only 10% expressing confidence in the new National Assembly. So restoring political trust must therefore be a top priority for the next government, regardless of its political affiliation.
So how representative do you think the next Prime Minister will be of the French people's political views at the moment? That looks like a real challenge at the moment. The French political landscape is becoming increasingly fragmented. How can one person represent that? And how challenging is that for that person's job going to be going forward? And how sustainable will that person be in the position of Prime Minister?
This is the whole challenge, because we are it's so unusual for us. We were used to have assembly with clear majorities and a huge stability. And for the first time, well, it was already the case in 2022 because Emmanuel Macron party didn't have this huge majority that he used to have in 2017. But for now, we have a really different political sensibilities represented in the National Assembly. And we have to find the one who is not going to be followed with a no-confidence vote. No-confidence vote is the key to understand the complexity of the situation. If the no-confidence vote is voted, it's going to be, we're going to do it all over again, and President Macron will have to find another prime minister, and it can last really long. So it's like we need to find this really rare person who is going to satisfy the left, the right, the far-right voters, and also the presidential party voters. So it's a big challenge for Emmanuel Macron, and it's a big challenge for our democracy, because it's the first time that we face such a unique situation.
The joke always goes, who do I call in Europe? It's always been an issue in Washington as to where the leadership sits in Europe. Does the leadership no longer sit in France? Does the leadership no longer sit in Germany? Where does political leadership in France come from at an EU level. How much authority do you think Emmanuel Macron still has, given what is happening in the background behind him with domestic politics?
It's a very important question because, as you said, Emmanuel Macron has always positioned himself as pro-European and a great defender of what he called the European strategic autonomy. And today it could be weakened on the European stage. I say it could be because for the moment, France is not like totally weakened on the European scene. But during the previous cohabitations in France, the president, he always kept the initiative on foreign affairs and defense. And I think this is likely to continue, with Emmanuel Macron still assuming leadership on European and international issues. So it would also appear that the president now he wishes to impose the name of his Minister of Foreign Affairs and Defense because he considers that as its prerogative and it has to be involved in the question. But you're right. We pay close attention to what's happening in Germany. Because the Franco-German couple has always been seen as the driving force behind Europe. And if this couple is weakened, it's the whole European dynamic slowing down. And especially since the European election with far-right party in Italy or in Poland that are growing and that are so attractive for so many voters. So if tomorrow the leadership of Europe is in Italy with Giorgia Meloni or other countries that are no pro-European, it's a risk that is very important for us.
Blanche, good morning. You mentioned in the search for a prime minister that the president needs to find that rare person that will satisfy the left, the right, the far left, and the centre, and try and bring it all together. When we get a name, what do you think what analysis should we be doing when we see the name of the person who has been chosen? Are we thinking about the part of the political spectrum they represent, or are we just thinking about whether they can survive, whether they can offer some kind of compromise?
I think the first thing we have to see for this person, whenever he will be appointed, is its program and its political vision. Because we talk about names, we talk about castings, but we don't talk about ideas. We don't talk about ideas to reform the countries. And we know that there are so many reforms that are needed for the moment. We had really bad news on the economy side this morning. We know that our public deficit is going to be higher than forecast. There are so public finances at debt, and it's absolutely key because we have to vote a budget for 2025 before the end of the year. We have healthcare issues, security, migration issues. So I think all the deputies are going to be really attentive to the program. And we have this important moment at the beginning of when a prime minister is appointed. He make a big speech in the National Assembly, and he is explaining what is his vision for the country and what are the priorities and the reforms that he is going to handle. So I think it's going to be a really important moment. And all the members of the parliament, they are going to be really attentive to these topics. And is he going to be able to restore public finances, healthcare, security, migration? I think program idea it's the key issue now.
Blanche, a final question as you kind of focus in on these democratic issues. We've been talking about this in the political sphere, but of course in recent weeks we've of course been watching the arrest of the founder of Telegram as well, and it's brought up questions around the EU scrutiny and France's scrutiny when it comes to these social media companies, whether or not what happens with Pavel Durov sets the tone for the likes of Mark Zuckerberg, Evan Spiegel, even Elon Musk. And I'm curious where France sits on that in your view. Is this a tone setter, or is this an idiosyncratic story in your view?
So actually, social media played a very important role in the politicals in general, and especially in the European elections campaign. We know that especially for the candidate of Rassemblement National, Jordan Bardella, he was absolutely omnipresent on TikTok and other other social medias, and it succeeded in attracting a younger electorate thanks to this method. And it was also key in terms, and you know those topics as well, fake news and fighting against false information circulating on social media or conversation platforms as Telegram or WhatsApp. So it's a really important issue in France and in Europe. And we know that the protection of the user, protection of the kids is absolutely key in France as well. It was school return in France yesterday, and we know that mobile phones are going to be progressively banned in secondary school, as they can be responsible for the increase in school harassment. So yeah, it's a key issue in France, and President Macron was really involved in this topic, and I know that it's the same at the European level.
Yep, it's happening across the whole of Europe. My kids are putting them in little pouches this morning for the first time as they go back to school, tomorrow morning maybe. Looking forward to seeing the effect of that on their mobile phone usage. Blanche, thank you very much indeed. Blanche Léredon, Editorial Director, Institut Montaigne, and former advisor to the President of the French National Assembly. Thank you very much indeed. Coming up, we're going to turn to what is happening in the aviation sector this morning. Cathay Pacific providing fresh insight into why it cancelled multiple flights over a component fault in Rolls-Royce jet engines. We'll discuss the impact of that globally next. This is Bloomberg. Welcome back. First full session of the week. The US is back a little bit later on today. It is the 3rd of September, kind of back to school feel this week. We're going to talk about how many feet are going to be under desks a little bit later on. But basically, equity markets are drifting, waiting for, I think, a sense of direction to come out of the States a little bit later on today. We get ISM, but we're kind of working our way towards the labour market data that we get towards the back end of the week. One stock that you want to be paying attention to this morning is Rolls-Royce. It is now up by 4.5%, 4.63%. It's bouncing back quite strongly after the declines that we saw yesterday afternoon. This on the back of reports that we got out from Cathay Pacific, not Cathay, that's a completely different person, Cathay, that they were having issues with their 350 engines. They cancelled a whole bunch of flights. This is related to the Airbus A350 and the Rolls engines that are on that. The carrier now expects all affected aircraft will resume operations by Saturday, which probably tells you that actually this is a relatively straightforward fix. Let's bring in Bloomberg's Deputy Leader for Global Aviation, Sid Phillip. Sid, the stock's bouncing back. The sense seems to be this morning that this is a relatively straightforward fix. This is basically replacing an armoured hose in the fuel feed into the engine. That's something you can probably reach from the outside of the engine. You'd have to take it off. And that feels quite straightforward. Was yesterday's reaction an overreaction, maybe?
It's still early days, and so everyone needs to we still need to see what the root cause of the issues were and essentially what the fixes are. But at the moment, it does seem relatively straightforward. We understand that it was an issue with fuel lines to the engine, and so essentially that is where Cathay will sort of have to, they said that it should be a relatively easy fix. They've fixed 3 planes already, and they've identified 15 aircraft that need to be fixed, and they expect all aircraft to be back in the air by Saturday. So based on just on those statements, it seems like a relatively easy fix. At the moment, we still need to see what the impact is on the wider global fleet, because regulators have yet to weigh in on what the findings of that investigation are and what the global impact will be.
It doesn't sound likely, from speaking of, from very little knowledge of the, how these things work, but it doesn't seem likely that if there are 15 of the aircraft affected, that they're all with Cathay, does it? Or could it be possibly that?
No, so exactly. I mean, it could be a wider issue. I mean, Cathay Pacific did say that they were the first airline to discover the issue. And so it does remain to be seen whether or not there's a wider issue with the A350 and if it's restricted to the 1000 variant, which was the aircraft that was affected on the flight yesterday, or if it's with the smaller 900 variant as well.
They mentioned both today.
Exactly.
Yeah.
So it's still very sort of early and.
What's the read-through for Rolls-Royce here? Where do they play a role?
So Rolls-Royce obviously is the sole supplier of engines of the A350, and the A350 is really Airbus's next generation jet. It competes against the Boeing 787 as well as a top-end 777X, which is yet to be certified. And the A350 has seen lots of success in a couple of years as airlines look to replace their oldest aircraft with newer, more fuel-efficient aircraft. And so it is a key. The A350 is a key part of both Airbus's future plans as well as Rolls-Royce's, because Rolls-Royce only makes wide-body engines at the moment. And so for them, it is important that they get their everything sort of on track and make sure that there's no degradation. Because, I mean, this engine has been criticized by some airline CEOs, including Tim Clark, saying that it's defective because it doesn't have as much time on wing. And that's largely because aircraft engines are getting more efficient, but at the same time, they also need more maintenance and more frequent maintenance. And that's been a gripe for airline CEOs. And so it will be remains to be seen what the impact will be.
Well, this morning, the impact seems to be an almost 5% move higher in the Rolls-Royce stock. Sid Phillip, we thank you so much for breaking us that story down for us. Some headlines crossing the Bloomberg terminal here coming out of the European Commission, or at least top court there, around Illumina and Grail. Now, this is a really big deal. They're saying that the deal was wrongly probed by the EU. Illumina is, of course, a biotech company in the States that initially spun off Grail, which is a maker of a type of technology that tracks blood or tracks cancer through your blood. It's a really big deal, could be game-changing technology. But after the spinoff, they tried to buy it back. And that deal caught a lot of scrutiny, not just from the U.S., but from the EU as well, ultimately and arguably costing the CEO at the time his job as well. This is a really big deal because it was also seen as a way for the EU to potentially use this deal to be a precedent creator for other mergers in the U.S. and also right here in Europe. The fact that the top court is now saying that probe shouldn't have happened in the first place is a massive deal. We're going to keep you apprised of all the headlines as we get them. But let's turn our attention now to another top story that we're watching out of the Middle East, where thousands of Israelis took to the streets in labor strikes and protests yesterday. It's the strongest push yet to force Benjamin Netanyahu's government to agree to a ceasefire with Hamas and secure the release of hostages in Gaza. Let's bring in Bloomberg's Jumana Bersetchi in Dubai following this story. Jumana, bring us the reaction from Benjamin Netanyahu.
Well, that was the big question. People were waiting to see whether this was going to be a turning point or a pivotal point in terms of the ceasefire discussions. Yesterday, in a rare, I should say, televised interview, press conference, the PM actually doubled down. He was very defiant and said, we are not going to give any further concessions. The message is very clear here, and that if Hamas commit murders, we will not reward them by giving further concessions on the deals. And the background to this, of course, is that hundreds of thousands of Israelis took to the streets on Sunday, followed up by further strikes taking place yesterday. Thousands of people congregating, workers, the biggest union called for people to descend to the streets to apply pressure on the government to get that ceasefire truce agreed to in order to secure the release of the outstanding hostages. It's estimated to be at around 100 hostages still sitting with Hamas. And the background, of course, to that is that the bodies of 6 hostages were recovered in a Gaza tunnel on Sunday. And forensic evidence showed that they had been killed shortly before they were discovered, which sent outrage and shock throughout Israel, and really the biggest demonstration we've seen since the beginning of this war, calling on the government to get something agreed to so that the other hostages can be released. Time is of essence, the clock is ticking, but essentially the wording from the government here is that they are not going to back down. And there is one key sticking point, and that is the Israeli presence on this Philadelphia corridor, which is the border that separates Egypt from Rafah on the Gaza Strip. Israel and the Israeli cabinet have signed off on the position that Netanyahu has taken, which is that they cannot remove Israeli presence from that corridor, even for a short amount of time, for the first phase of this potential truce, because there are concerns that the Hamas operatives could continue to smuggle weapons through that corridor. Hamas and Egypt, however, say that it is a deal breaker for them to maintain a military presence, hence why there's still a lot of daylight between the two sides and unclear at this point where the compromise is going to be reached.
Jemana, thank you very much. Thanks for the update. Jemana Besetcha joining us there with an update on domestic politics in Israel and the wider regional story. Let's focus back in on the markets and what might move things as we go through today's session. It is Tuesday, 9 a.m. UK time, so that's coming up shortly. We'll hear from the Riksbank governor. That conversation will be in focus. 1:45 p.m. we will hear from the Bank of England Deputy Governor, Sarah Breeden. She will be speaking at an event. Then 3 p.m. UK time, we'll get the US ISM Manufacturing Index. And we've got some earnings as well. But I think it's interesting as we beat the drum towards the jobs report on Friday, we will get this glimpse of whether we're getting any kind of uptick in manufacturing, or indeed is this going to be a bit of a warning sign about what could possibly come in the jobs story?
So it's interesting, manufacturing's been down for a long time. So that ISM data has been weak for really quite a while. Tim Fiore, who runs that data series, has talked about it bouncing along the bottom, and that's been the story for a consistent period. Do we start to see, though, as maybe rates come lower, manufacturing bouncing back? I think that's going to be certainly something that people are going to watch for. What kind of a lag are we going to be watching for there? The data's going to be really important this week. This feels like the first kind of proper week back. There's an interesting story, though, that is trending this morning about how few people... It's nice to see everybody here around this table again, 5 days a week. It's interesting to talk about kind of how, actually in London, most people aren't. 2.5 days a week is the average for a London office worker now.
So not just for the summer, for the whole year.
Yeah, precisely.
When do we get that arrangement? It's exciting.
I don't want to go back to broadcasting from home. That was not a fun experience. I was on a very steep learning curve, and it didn't all end well.
I mean, I think we all were, but, you know, my dog Harvey made a great appearance in some of those camera shots. I think it could be fun, bringing a little energy around the open.
I'm firmly with Anna on this one.
I do think it's interesting, though, when, you know, if there is some discrepancy, some divergence between London, where you're seeing more work from home, cost of travel comes into it, doesn't it? And some of the other European cities in this survey, but they don't vary that much. I'm particularly interested in whether companies adopt a sort of stick or carrot approach to if they want to encourage people back into the office more. I mean, some have taken the opportunity to actually reduce their office footprint, haven't they?
Well, that's why you're seeing the shakeout in the office markets, and that is really beginning to gather pace as well. That's certainly something, that's a rate story as well, but it's also part and parcel of what we're talking about here. But it's interesting, the French compensate workers to bring them into the office. That's actually something that they do on a regular basis. So it's going to be interesting to see how, and this piece makes the point, how perks change in terms of encouraging that process. Is it just enough to come into a nice office, or do you actually need, as you say, to provide more and maybe compensate people for that journey time?
Kriti would like to bring her dog.
I'd like to bring my dog, but I think Jamie Dimon, Brian Moynihan, Jane Fraser have all made the point that you can actually learn more in person when you come into the office. So they've been pushing that in the banking sector.
It's not a younger people problem, this. Younger people are coming in, but maybe the commute times are shorter for them.
I don't know. I feel like the young people I know are not coming in, but that's a separate point.
Right. Let's tell you what is coming up on the next hour of programming. We will be focusing in on the beauty sector. Shiseido's UK Managing Director joins us to discuss consumer behaviour in the UK. That conversation in the next hour of programming. That is it, though, for the opening trade. Enjoy your day, everybody. This is Bloomberg.